Dornbush download number 103, Deja Vu, Brendan.
Yes.
Profit reporting season. We're in the middle of it, and I think about 40% of companies report this week, so it's a pretty important week. You're sort of our resident research guru, all the stuff that you've been reading. What's sort of the general cut and thrust? Like coming into profit reporting season, was there like a lot of expectations or?
Well, the expectations were quite low in general.
Okay.
And we've been meeting those expectations, or the companies have.
I was going to say, not us.
Yeah.
We exceed expectations a lot.
That's right.
But from a profit reporting point of view, you're quite right. There hasn't been any sort of like stellar results, but equally so, there hasn't been any sort of real shockers either going, oh my goodness. I saw today companies like Hansen came out with okay results. I'm just trying to think, what are some of the other ones? Certex today came out with an okay result as well. There's a couple of, emerging leader style companies that we've been following. But even if you have a look at, say, like CommBank's result again, it was okay, and I think that's really where we are at the moment. Like the share market is okay. It's not outstanding value, it's not dirt cheap. Like I think, we can look back at Brexit and say Brexit probably was a good opportunity to be sort of picking some shares up on the cheap. But now it's actually just, as it's starting to really pour here, it's just not really, it's sort of a nothing. I think if you could sort of, I know that doesn't really help you, our loyal Dornbush Download viewer, but it's just paddling away, it's just sort of holding water. So Brendan, from a market point of view, and you look at charts and all that sort of stuff, we're sitting at about 5,500, which is pretty high relative where it's been over the last 12 months. Where do you think is value? Like if you had you're a committed buyer, where is good value from an index point of view? Like what's the number?
Yeah, around that 5,000 mark. Yeah.
Okay.
So if you see it come down to there, yes.
And like we said,
it doesn't hold.
Yeah, that's
and it holds. I should say it's around.
And if we think back over the last 12 months, it did that like 5 or 6 times, and it kept on bouncing off that 5,000 mark. So I guess that's sort of the floor. From a ceiling point of view, so we're at 5,500 at the moment. Where would you think again? And this is more our trading clients. If you're a buy and hold person, who cares? But our more active clients, where at 5,500, at what point do you start seeing things are getting a bit overdone? Where would I start selling it?
Yeah, maybe another 100 points or so from here, so around 5, 6, maybe 5, 7.
Okay,
Yeah.
and it's an interesting question because, if it busts through 5,500 and gets a bit of a run on, like we were just saying, we're sort of stagnant at the moment, but it gets a bit of a run on, it would actually be pretty hard to press that sell button at 57 because it could actually keep on going.
That's right.
But equally so fundamentally, so coming back to profit reporting season, we're not seeing anything in profit reporting season to actually justify values. Like, so to see the share market going up, you want to see profits going up. Profits are flat or going up a little bit, and the only reason they're going up is because there's cost controls, not because people are out there spending. It's because businesses are cutting employee costs or whatever. So it's very short-termism. It's not really sort of long-term type of stuff. So again, I'm with you, 56, 5,700, I'd sort of have the finger about to do this. Whereas if profits were shooting the lights out, absolutely, you just let it keep on going. So in light of the share market being a bit elevated at the moment, we're involved in a number of floats at the moment. So ANZ putting out a note. But the other one that we're doing is one called US Masters. And what's the code on that one? URF.
URF,
yep. And Brendan will stick a little chart in here.
URF.
So basically what US Masters, so again it's listed on the ASX, and what they're doing is they're basically buying buildings in New York called brownstone buildings, built between 1860 and 1914. Sort of at the fringe of the CBD, if you can put it that way. So these are derelict buildings or unloved buildings. They refurb them up and they tenant them out, and they sit there and collect the rents. It's a pretty simple strategy. They've got about $1 billion worth of property that they've now done that with since 2009. The average property they're paying about $390,000 a unit, which sounds like a lot, and off the pre-GFC low it was $300,000, so they have seen some growth, but pre-GFC it was $500,000. So it was 500,000, dropped to 300,000, we're now back to 390. They focus on areas where there's strong transportation links, and they're also, a lot of the new developments in New York are actually 1 and 2 bedroom studio apartments. So if you've got a family,
That's right,
Sarah and the 3 kids, they're not going to get a run in those studio apartments. So And as more people want to live in CBDs, there is greater demand for these brownstone buildings. So URF's returned about 16% per annum since it's listed, 11% growth, 5% dividend. So they're going to take this money that they're raising to basically go out and buy some more buildings and keep, doing the strategy that they have been doing. So, again, if you're looking for something a little bit different, US earnings, so with the dollar at 77 cents, we think the dollar will probably come back to 65 cents in 12 months' time. You get a bit of a kick up from the earnings. People have got to live in houses or units. That greater demand for inner city living. There's a lot to like around URF, so if you're interested in that, please let us know. Otherwise, there's a couple of others, but we'll probably talk about them next week because we're running a bit long on time. But Brendan, anything else you wanted to cover off on?
Pretty right, thanks.
You think we got it? So the key takeaways, earnings profit reporting season's been okay. Have a look at URF if you're interested in sort of exposure to that US property, and if you're a trader, keep an eye on sort of that 5,500 level, because if it keeps on sort of shooting up a little bit more, you might want to just start taking a little bit of money off the table in anticipation if it were to come off.
That's right.
Otherwise, till next week. Thank you.
Thank you.